How's it going, everyone? Welcome back to another Bitcoin update on the channel. In my last video, we were talking about this falling wedge pattern. We actually got the breakout on Friday, but unfortunately, if you stay tuned into that video, we always talk about Fridays and how the stock market shuts. So any move on the weekend, or especially on Friday included, they can't be trusted really. So just because there's low volume, no one's trading. And that's why we saw the very next day, momentum shifting, once again, dying down as we approach resistance. In fact, I was saying where Bitcoin is going to struggle with is the 200 EMA, and that we're getting really close to some bearish crosses. Since my last update on Friday, or Thursday or Friday, it has later developed and formed this bearish cross between the 55 and the 100, and we're about to get the 20 and the 200. So this is actually known as a golden cross if it's bullish, but in this case, as it would be a bearish cross, it's known as a death cross. So when you get a golden cross, it's a long-term bullish signal. So this is the complete opposite. We do not want to see continuation of this downtrend. Like last time, it came down to the 200 and recovered. It needs to do that this time. And on a path of recovery, although my belief is that we continue lower, I will show you the path now on how it recovers by holding this key level here, 82k. It needs to recover 85k before the bearish cross. So literally in the next day or two, it needs to recover. Otherwise, it will confirm that bearish signal. Forget about the bullish falling wedge. We've actually had one in the past over here, and that didn't even break out and meet the target. So although we have a target roughly around 95 and 100k for the falling wedge pattern, 6 times out of 10, it's meant to go ahead and hit the target. But even though something is bullish, meant to break out bullish, there is still that 4 out of 10 chance that it does not succeed, which is crazy. And we actually have this exact example over here, 60 to 66% success rate, and it still failed. So you need to think that 33 to 40% risk that it does not play out is massive. So nothing is confirmed ever. Even if you see a bullish pattern, it doesn't even mean that it's going to fully break out with 100% guarantee. Nothing here is. But with this falling wedge, yes, the pattern target would be 95 to 100k. I just don't think the target would get met. Why? Because we got bearish crosses that just formed in the last couple of days, and we're about to get another bearish signal, the death cross. In a situation where 82k holds and we see the death cross reclaimed 85k, it will just pump into the next bearish cross. So not assuming it recovers this key area, not assuming it recovers 89 to 92.7, I left you with this zone in my last video update using Fibonacci's off of this high and this high down to this low. And you can see currently through this, the one that I have placed on at the moment, followed by the other one, they overlap, and I'm just looking at the 786 and 886 between the two. That is when the reversal wave is created. So only going to see Bitcoin targeting 100 to 105k on the break of 92,700. So without a reclaim of all moving averages and 92.7, we won't see 100k. We won't see 105k. So right now, the signals that I'm seeing down over here are not bullish either, because we saw the breakout on Friday, which I warned stock market shuts low volume. The very next day, low volume, because we're getting an indecision candle called a doji candlestick. So that it's just showing that the momentum is dying, because if the bulls were truly there, it'd just be a massive green candle like the day before. And then the next day, Sunday, actually engulfs the previous day. This is a bearish reversal candlestick pattern. So from coming up, dying down the momentum has now shifted into bears. But a few days back in the week before, we can see, even though there was a bearish engulfing pattern, the next day, wow, it engulfed that engulfing one. So quite confusing. The red one engulfed the green, but the next day the green engulfed the red. So it invalidates the bearish signal. We're not getting the invalidation of the bearish signal today. In fact, today's current candle is a shooting star. There are 9.5 hours left. So this can, of course, change. Please do understand, closing as it currently is a shooting star candlestick pattern, a further confirmation of this reversal. So, of course, seeing it pumping up, breaking out of the pattern. Unfortunately, because it's Friday, it doesn't give it sustainability. We see it weakening, the momentum dying, the momentum shifting now into bears. And then today, further confirmation of that stance, because there was an attempt by the bulls. And of course, failure, as we can see, it currently rejecting. I will mark out for you some short-term support we could get a short-term reversal from. So that is between 82 and 80k 8k. Unfortunately, what I must say is that I'm only expecting somewhat of a short-term bounce from here. I don't think it would become a long-term bottom. Obviously, if it develops into, I'll be the first to let you know. But I think that any bounce from this location, 80 to 82, it will just be a lower high. I'm not expecting a bounce from here to recover 85. In the case that it does, that's your next target. Breaking through here, that's your next target. But my assumption is that it will fail to recover 85k. It will maintain this high that we're creating over the weekend here. And it's just pulling back into that, as we saw today, to dump back into here, maybe get one more try, and then eventually losing it. I will be here to update it as it develops, but my thought process at the moment is that even though we have the bullish breakout of this pattern and the target is 95 to 100k, how it developed the day that it happened, it's not in its favor to be a sustainable move up. It can change if we see the recovery of these two zones, but until then, I'm going to remain bearish. I don't see any signals in this zone since Friday to suggest it is continuing higher. This is just a corrective move back up into the moving averages before continuation low, in my personal opinion. Just keep aware that 80 to 82k can bring this short-term bounce, but don't get overexcited. I will update it as it develops if anything changes. If you want to get further education, stay in the loop, or be part of my group workshops that I do live every single week in the Discord, check out the links in the description or pinned comment section. If you want something more personal or one-to-one, or you feel like you don't even have time but still want to learn, there are ebook or one-to-one options on the website as well. Please like on your way out. We're trying to hit 10k. And yeah, if you could comment as well, it'd really be appreciated.